Today, Russia becomes the first country to approve a COVID-19 vaccine, but it has yet to complete certain clinical trials or release any data. Plus, with the vacation rental market red hot, Airbnb confirms it will file to go public this month. And finally, call it a gold rush. Investors have been piling into gold this year. Should you do the same? That precious metal traded lower today and will break everything down for you. I'm MacKenzie Sigalos, and this is CNBC After Hours. First, we start with some news that was breaking literally as we were taping today's After Hours. Joe Biden has selected Senator Kamala Harris as his running mate for the presidential election. This is historic. Harris is the first Black female vice presidential nominee of any major party, and there was a lot of anticipation ahead of this announcement. If elected, Biden would be the oldest president ever at the time of his inauguration. Make sure to check out CNBC.com for the latest on how Wall Street views the Biden-Harris ticket. Okay, now let's look at Wall Street's day. The major indices closed lower across the board as stocks started selling off in the final hours of trade. Today is the S&P 500's first down day in 8 days, but the third in a row for the NASDAQ. That index hasn't had a 3-day losing streak like this for 5 months. Both the S&P 500 and Dow were trading higher earlier in the day after it was reported that Russian President Vladimir Putin announced that the country had issued the world's first approval for a COVID-19 vaccine. Putin also said that his own daughter had already taken it. But like we saw the market learn over the course of the day, no one should get overly excited about this. There is major international skepticism about this vaccine candidate. No data has been published by researchers yet, and phase 3 trials haven't yet begun. CNBC's Tirrell can compare how the Russian vaccine's timeline stacks up against some of the leading contenders in the US and the UK.
So Russia said that it had approved the world's first coronavirus vaccine. That comes with so many caveats. Essentially, what they've done is they've approved a vaccine after only testing it in a few dozen people and after observing how it worked in animal studies. So by Russia saying that they've won the coronavirus vaccine race, they've only done it by moving the finish line to about halfway through the race. To put that into context, we have multiple American efforts that are at least at the same place, if not more advanced than where the Russia vaccine reportedly already is in terms of the data it's generated. And of course, the AstraZeneca and Oxford vaccine out of the UK also has presented more data than we've seen on this vaccine. So there are many concerns about whether it will prove to actually be protective in people because there are no data showing that so far. You need large-scale studies of thousands of participants to show that, and whether it will be safe when it's administered more broadly, potentially to a large portion of Russia's population. Vaccine experts are worried because sometimes there can be safety issues that might pop up when vaccines are given more broadly that you just don't see when you only test it in a few participants initially. And that's why we're running these phase 3 trials of tens of thousands of participants so that we get these answers and we know that we have vaccines that are both safe and that actually protect us against the coronavirus. What we've been hearing from companies in the vaccine race is that even as they are running these large-scale efficacy and safety studies, they are simultaneously ramping up their production so that there are doses available if and when their vaccines prove to be safe and effective and they get some nod from the FDA. So as Russia plans to ramp up manufacturing of its vaccine, the same thing is happening around the world in other countries. The only difference with Russia is that it's decided to approve its vaccine before it's actually proven to be safe and to truly work. Here in the United States and also in some other countries around the world, late-stage efficacy and safety studies have begun from companies like Moderna and Pfizer, as well as AstraZeneca and Oxford outside the United States, and they plan to start one in the U.S. soon as well. These are trials of more than 30,000 participants, and they do expect that depending on how quickly they can enroll those trials, they should have data within a few months. Depending on how those data look, they could receive potential FDA approvals or emergency use authorization by the end of this year or early next year. But then the supply of these vaccines will be the major question. There is not going to be enough of them for everybody at the beginning. So that will be the next question.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
I wouldn't take it, certainly not outside a clinical trial right now. It appears that it's only been tested in several hundred patients at most. You want to make sure it works, and you also want to make sure it's safe. This isn't a trivial technological platform that they're using to manufacture this vaccine. And so there's more things that can go wrong from a safety standpoint, including that you can get a reaction to the viral vector itself.
Anybody who's going to live on our campus, we're requiring them to be tested. We tested 600 students yesterday. We had one positive out of 600, which is lower than I thought.
Our assumption now, our modeling assumption for all of our commercial aerospace stocks, including Boeing, is that we get back to approximately 2019 air traffic levels globally by 2023. It appears that might be a little bit optimistic.
Taxpayers had to foot the bill to provide unemployment insurance to Lyft and Uber drivers because they didn't have any, because Uber and Lyft didn't provide any. Any business model that relies on shortchanging workers in order to make it probably shouldn't be anywhere, whether California or otherwise. And I just don't believe that that's what it takes for Uber and Lyft to make a living.
There's been so much news in the stock market lately, but today we want to talk about commodities. One in particular, gold. Now, gold prices traded down about 4% for much of today, but longer term, the commodity has been hot, up about 30% in 2020 so far. Now, compare that to the S&P 500, which is largely flat in the same time period. Now, last week, gold prices topped $2,000 per ounce for the first time. And one expert told CNBC that these prices could reach $4,000 over the next few years, although not without overcoming a few challenges. So what's behind the great 2020 gold rush? And should you be buying gold? We asked CNBC Markets wizard Bob Pisani to break it down.
You know, there's a bit of a gold rush going on right now. Gold's up more than 30% year to date. The gold ETF, GLD, it's the 6th largest ETF in the country. So I think gold's rallying partly because the dollar's weak, but largely because people tend to flock to gold during periods of uncertainty. There's other reasons. The big one that's often mentioned is diversification. A lot of investors claim that gold should be considered as a separate asset class, separate from stocks, separate from bonds, and even separate from other commodities. And you can diversify your risk since gold is often not correlated with the movement of these other asset classes. One of the keys to gold's success is it's a lot easier to own now than it used to be. Years ago, it was pretty hard to own gold. You had to buy it. You had to buy physical gold in the form of bullion. Bullion is essentially gold bars, or you had to buy coins. You could invest in gold futures even 20 years ago, but it was pretty complicated and difficult. Today, one of the reasons gold has been so successful is it's a lot easier to own gold. You can still own the physical gold directly if you want. Many people do. But many investors now own gold through these exchange-traded funds, the ETFs, and in most cases, the gold is held in storage in a vault for you. The largest gold ETF, it's the Spider Gold Trust, the symbol is GLD. As I mentioned, it's one of the largest ETFs in the world. It's got $85 billion in assets. So despite all these attractive qualities, sounds pretty good. It isn't obvious that everybody should own gold. This is hotly debated amongst investors for decades. It's performed well this year, very well this year against stocks, but not well in the last decade at all. One study found that from 1972 to 2013, stocks outperformed gold, whether the rates were rising or falling or flat. But here's the really big problem with gold that a lot of professional investors bring up all the time. It doesn't do anything. This is what I call the Warren Buffett problem. Warren Buffett's had a big beef with gold for a long time. He calls it an unproductive asset. What does that mean? Well, he means that unlike stocks, it doesn't throw off any earnings in the future that you can lay claim to. It doesn't do that. And it doesn't even pay a dividend. And unlike bonds, it doesn't pay any interest. It just kind of sits there. One of the things about gold is that the price of gold is denominated in dollars. Now, this has a lot of implications for gold as an investment, because think about this. If the value of the dollar goes up against other currencies, people in other parts of the world have to buy gold denominated in dollars, and it costs them more to do that. So generally, when you have a really strong dollar, gold tends to have problems performing because it's more expensive for other people in other parts of the world to buy it. The dollar's generally been weaker against other currencies, and gold this year has outperformed.
Okay, time for today's numbers round. We'll kick it off with $18 billion. A source confirmed to CNBC that Airbnb is planning on filing for an IPO later this month. The company is currently valued at $18 billion, which is less than the $31 billion valuation that it achieved in its 2017 funding round. Now, with vacation rentals in high demand as people look for larger spaces while they work, learn, and stay at home, Airbnb seems to be taking advantage of the moment. But it's not like the company made it through the COVID-19 pandemic unscathed. Remember, 25% of its staff, roughly 1,900 people, were laid off this past spring. Next, 4.3 million. Robinhood reported more trades than all the other retail brokerages in June. Now that month, the startup saw 4.3 million daily active revenue trades, something called DARTs, which is more than E-Trade and Charles Schwab combined. DARTs are a key metric for the brokerage industry. It's the standard measure of consumer trades, even though companies no longer charge commission. Robinhood said its DARTs in the entire second quarter more than doubled compared to the prior 3 months. And finally, 517. Electric vehicle startup Lucid Motors is taking aim at Tesla with a new luxury sedan with a record 517-mile range per charge. The Lucid Air sedan is expected to go into production in 2021 at an Arizona plant and will be a potential competitor to Tesla's Model S, which currently has a range of 402 miles per charge. That's it for After Hours. Make sure to check out CNBC.com and download the CNBC app for the latest developments in the world of business. We'll be right here in our home office every Tuesday and Thursday, so be sure to catch us then. And we'll be back with our Friday edition of After Hours next week.